Hello? Hi, it's me, CryptoClick. Yeah, I notice you're trading on crypto exchanges, but without any benefits at all? That's madness. You know, I've been made an affiliate partner with pretty much every exchange out there, so if you want to get some benefits, you might as well set up exchanges with the links that I've got in the video description or in my Telegram and Discord. You can get welcome bonuses for signing up, or even better, up to 20% off all your trading fees for life. Yeah, I know, what a treat. So next time you fancy setting up an exchange, use some of the links that I've got in my video description, because otherwise you're mugging yourself off. Anyway, enjoy the rest of the video.
Hello everybody, welcome back. Let's have a look at Bitcoin. Just going to focus on Bitcoin, a little bit on traditional markets, although it is very early over here, so we're not really going to entertain much from traditional markets until they open later on today. And I'm talking American markets, really. So let's think about Bitcoin. So yesterday we were talking about the descending triangle which we're in. So here's your triangle formation, here's your apex over here, and how that is a bearish formation. But while we were within it, you could just be keeping an eye on the resistance area. So we've had 3 now. So we got this. We were talking about this yesterday, the retest of the golden cross, a move up to the top side of this range, and hopefully get a breakout from it. So we didn't get a breakout, we had a rejection. Fair enough. So it's reasonable reaction from there, I suppose. Quite a hefty rejection, but no different to the previous ones, really, which were quite sharp. So we've got 3 sharp rejections now falling from this downtrend of resistance. Fair play. We're below the moving averages now on the 4-hourly, so we're below the golden cross formation. So we had a golden cross, we got the retest of it, we had a move up to the top of the range, and now we were plummeted back down. So one thing we can think about now that we're in this, down to these low levels, is that there's another formation, and we're on the formations today, right? Which is a falling channel or a falling wedge, depending on how you draw it. I prefer a channel, but I suppose you could argue it is a wedge, but that wedge would go on forever if it's not very pointy, let's just say. So yeah, these are obviously downtrends, just mapping out a downtrend, but a downtrend within a channel often breaks out. So we've got the descending triangle, which is a bearish formation because every time we reach a top we get less of a return. So the support stays the same, but the resistance gets less, and you're more likely to break down from that. But a channel like this offers a breakout, so it doesn't mean it's going to happen. Just say that, we're just talking statistics. That's all trading is. Statistically, more likely to break out of a channel, but statistically more likely to break down from a triangle. Anyway, that is that. The main thing to focus on at this point, now that we've revisited this zone, is that this is our breakout sideways formation, right? So we had a breakout level here at the top and a breakdown level here. Bitcoin chose to break out, and so we've already had a retest of that breakout zone. So I don't like the fact that we've already come down for another retest of it. I probably wouldn't even really call it a retest at this point now that we've come down to it, but there's no bullish divergence, which is my problem, I think, at this stage. Looking for I suppose a major move up, immediately, without the, let's just say, the health or clarity of traditional markets, is probably unlikely, because you can go down like this, you can be in a falling wedge, falling channel, whatever, that's fine, but you do really want to be seeing some kind of simmering momentum below that within the RSI. I mean, we do have it for money flow index, but I'd rather see it for RSI, because we want to see momentum of price there, not as much as volume, although both of them are quite good. So let's think about the good things, right? So this bottom level here, the breakout zone, is a strong support, strong enough anyway. I wouldn't say it's really, it's not like platinum strong or anything like that. Titanium strong, it's nothing like that, but it's strong enough, and the reason obviously is sideways channel. We broke out, you can come down to retest it. It is a support. It previously was major resistance, finding lots and lots of problems when we came up to it, so you'd expect to hopefully see some decent reaction from it as well. Also from this falling channel, hit it again here, hit it again here, so this is a descending level of resistance support, which so far is holding as well. If we move it to the daily, you can also see on the daily there's a 21 exponential, which is more or less this little grey number here. Let's just have a look. Here we go. To which we're above as well. So 21 is quite good, being above it. I'd say you're 65% more likely to remain above it, as is the Bollinger Band, which is just below the support. So between 21,544 and 21,855, and then obviously our horizontal support and the the channel all come in at that, we'll just call it 21,500 basically. All of this area is relatively good for support levels that have been, you know, generated one way or another, whether it be moving averages, formations, horizontals, wherever. They all kind of combinate early. Look at the time. It's early, and I've been up for about 2 hours. Anyway, they're all merging into one sort of zone between these areas. We're already down 3% on the day. Actually, you know, in all fairness, we're down a lot more than that. From week to week, it's 4%. So that's a fair old drop for our friend Bitcoin. And also, if you think about this on a daily, 1, 2, 3, 4, 5, more or less 5 reds in a row. You know, it's not looking particularly pretty, but I like the support zone around here. And again, you know, if we're trading whichever formation you choose to trade, or whichever moving average you want to trade on, that is support for you there. So, like I say, there is hopium involved with that formation, at least the descending, the falling channel, the falling wedge, falling channel. That is a bullish formation. For at some point, you get breakouts from here. I still think that there's a very good chance that we do break out from here, but for the moment, without the bullish divergence, we might just remain within this channel until we start to see something a bit more positive. Maybe what we see is a move back up to the top of the range over the next few days, and then on the next move down, we generate the bullish divergence, which could be enough to break us actually out of this channel and go to those targets of around 26,600, which is more or less the target I would have put on this current move. So let's have a think about traditional markets just very briefly. This is Nasdaq currently at more or less negative. Again, you know, traditional markets, American markets aren't going to be opening for 5 or 6 hours really, so this just gives an insight as to what a pre-market would be like, and it's basically negative. But the reason I'm bringing this to your attention is that on the weekly, I actually quite like it. You know, we closed above the 10 exponential, which is good. We've not done that in a long time, and we've got our histogram ticks. Not had those in a long time either. Not had a green histogram ticks in a long time. However, the last times we did get histogram ticks to the green did mark more or less tops before we came back down again. But you know, this is slightly different. We've been uptrending the entire time. Now we've been downtrending more or less the entire time. We bought the low on here. We've been doing quite well. It does offer continuation potential on a weekly, and I would think the Nasdaq could maybe even reach, you know, 12,800 Bollinger Band Center, 21 exponential basically, which would be the obvious place to take profit on what we called the everything bounce over here. That would be the obvious place. If it breaks out from there, fair play. But in this environment, you know, with inflation so high and continuing rate hikes and God knows what else is lurking around the corner, monkeypox is something I've been hearing a bit about, which, you know, anything is possible these days. You know, it does feel very much like a simulated reality right now. But anyway, yeah, the Nasdaq it doesn't look particularly bad on the weekly, and we're talking weekly. Remember, weekly. Daily also looks okay, although we do have bearish divergence forming, so there is that. And the 4 hourly also turning down. So yeah, I mean, at the end of the day, we are going to have to wait for American markets to open. The 4 hourly on Nasdaq still looks pretty good. Nasdaq has the better chart. And when we were talking about the everything bounce, 6-7 weeks ago now, when we were buying into all those stocks, it was mostly about traditional markets. You know, that's where that's where I deployed my money. Stocks and indexes. You know, what I have in crypto is what I have in crypto. The better trades really have actually been, well, maybe not statistically, but the more obvious trades were traditional market trades. Yeah, we did the Matic trade and a few others here and there, but yeah, traditional markets were the ones giving the clearest signs of what's going to do what, and Bitcoin and crypto just move through association at this point, really. So I'm going to leave with you there. Actually, one last quick little side note. Bitcoin dominance, still obviously low and being below most moving averages of significance, offering further downside, which could offer some more upside for alts. But I sold my alts last Tuesday, so almost a week ago now, because we were dancing around these lower levels. I don't like holding altcoins for the most part when the dominance is so low. As you approach 40% dominant, you're almost asking to get kicked in the nuts. And so yeah, most of my altcoins, in fact, all the altcoin trades that I've placed since we broke down here and had those two major pushes with alts. You can call them alt seasons, I suppose. You're doing over 100% on some of these. It is an alt season. You're doubling your money basically, but it's not the alt season that people want to see, and you're not going to get one of those until we're a lot higher dominance charts. So that, you know, you got to be grateful for what you get. That's what we're saying on the Patreon. You got to be grateful for the gains that you make. Let's not go crazy. We're not going to be looking for huge, massive continuation of trends. It's very unlikely to see that as a dominance chart is so low. But yeah, there is a chance that we do get a tiny bit more. But I think the risk to reward in buying any altcoins down at these lower levels is too high. You know, you're not really looking for. You might get lucky and make a 30-40% maybe trade. That's not much in altcoin terms, is it? That's not what you joined crypto for. I'm sure we all want the thousands of percent, or at least hundreds of percent, and you're very unlikely to get hundreds of percents while you're down at these low levels. So the best thing to do would be to move back into a Bitcoin position the lower you go. I see all these things on Twitter where people talking about, dominance is breaking down, man. Well, we're going lower. But really, when you hear that, when you see dominance going lower, all you should really be thinking of is selling some altcoins to Bitcoin, because the chances of you bouncing from this level only favors a Bitcoin position, even if Bitcoin were to go down. Anyway, you've heard it all before. Right, in that case, I will leave it with you there. It's going to be a much more interesting trading day later on today as American markets open. There's every chance that we do bounce from this area and move up to the top of the range. So we're talking 22,500 over the next 24 to 48 hours, and we'll see if that can break from there. Find it relatively unlikely, given that we've got no bullish divergence, although, you know, anything is possible. I think given what we're seeing, is looking more likely that we're going to see something like this, and then maybe a breakout like that, only provided that we get bullish divergence. So again, I'm holding off on buying any altcoins at this stage. Incrementally buying back my KCS, only because I want to get some bots moving up. Entering into some bots when we enter into a new range, whether that's a higher range or a lower range. That's what the bots are about. So I've got to obviously have the KCS to do that with. So, right, that looks like the analysis for the day. I'm going swimming with my daughter, and yeah, maybe I'll have a chance to make another video later on today. It is the summer holidays though, so the chances of that are relatively slim. Thanks for watching, guys. Take it easy.